Good afternoon. We'll go ahead and get started. I'm Zach Myers with the Center for Dairy Excellence. Thank you for taking the time to join our Protecting Your Profits webinar today. If you have any questions, please type them in the chat box by clicking on the chat box at the bottom of your screen and type your question. I will monitor the chat box and answer questions as I'm able or at the end of the presentation. Our goals today, like each month, is to provide an overview of current dairy market and of the current dairy markets and to review risk management opportunities. This is all public information, and while I may express some opinions, these are certainly not recommendations. So here's our agenda, same as usual. At 19.3 billion pounds, At 19.3 billion pounds, U.S. milk production is down and an unexpected or up an unexpected 3.3% compared to last April. U.S. cow numbers are up about 113,000 head from last April. Increased cow numbers were not solely responsible for the unexpected jump in milk production. The average U.S. cow produced 40 pounds more milk in April than she did last April. Pennsylvania cow numbers are down 10,000 head from last year. Milk output per cow increased a little bit, with the average Pennsylvania cow producing 20 more pounds of milk more than she did last April. Unfortunately, the increase was not enough to compensate for the drop in cow numbers. And Pennsylvania ended April down 1%, or about 9 million pounds less than last year. Perhaps part of the increase in cow numbers on the national stage came from lower culling. April dairy cow slaughter was down over 12% compared to last April. And of course, if you'll remember, last April was sort of the height of the pandemic, and co-ops and milk marketers, milk processors were asking producers to limit their production, reduce their production, and a lot of that was accomplished by culling cows. Dairy product stocks continued to build through April, with butter stocks up about 13 million pounds compared to last year. Actually, they didn't continue to build through April, but they were mixed through April. Butter stocks were up about 13 million pounds compared to last year, while cheese stocks were down about 25 million pounds, and March non-fat dry milk powder stocks were down 34 million pounds. At $1.79 per pound, April butter price is up about 64 cents compared to last year. And as you can see, it's a significant discount compared to the international prices with global dairy trade at $2.72 and the European Union at $2.18 a pound. Cheese price is up 77 cents per pound compared to last year. And again, as a discount compared to global dairy trade at $2.01 and just slightly higher than the EU price at $1.68. At $1.24, non-fat dry milk is 64 cents more than last year and is lower again than the global dairy trade price of $1.53 by 9 cents, and then slightly and 9 cents higher than the EU price of $1.15 per pound. March production was basically flat, down 0.6 or 1.1 million pounds of butter. March cheese was up 54 million pounds, or about 5%, and March powder was up 25 million pounds compared to last year. With an increase of 3.3% in production in April, it will be interesting to see how this affects production when the dairy products report is published on the next dairy products report is published on June 4th. My guess is that we will see production of all three increased. Butter disappearance is, moving on to total dairy product disappearance. Butter disappearance is up 12% to 155 million pounds, driven, butter is up to 209 million pounds, up 7% year over year, while American cheese is up to 466 million pounds, which is about a 4% year over year increase. Other cheese is disappearance was 704 million pounds, and this was down 4% versus last year. Non-fat dry milk plus skim milk powders were up 264 million pounds, disappearance was, and this is a 31% growth versus year over year, and a lot of that is contributed to increased exports and to Mexico and other places, and increased usage here in the United States. Just a short update or quick update on the U.S.-Mexico-Canada agreement, or the USMCA. The relationship with Mexico with the revised and NAFTA trade agreement has proceeded without much issue. However, Canada is another story. Via USMCA, Canada was to allow more access to its market for U.S. dairy. Canada was to increase quotas for dairy products at free or significantly reduced tariff rates depending on the product being imported. However, Canada has yet to honor this part of the agreement, and the result has kept U.S. dairy products from feasibly being exported into Canada. Yesterday, on May 25th, U.S. Trade Representative Catherine Tai initiated a USMCA dispute settlement proceeding over Canada's administration of dairy tariff rate quotas, or TRQs for short. By initiating this official dispute under USMCA guidelines, a panel will be put together to investigate whether Canada has been violating its trade obligations set forth by the USMCA. And if the panel finds that Canada has not upheld its part of the USMCA, the US will be granted the right to impose retaliatory duties if Canada refuses to meet its obligations. National Milk Producers Federation, the U.S. Dairy Export Council, and the International Dairy Foods Association have applauded the U.S. Trade Representative Tai in moving things forward. Also, a bipartisan group of 104 U.S. representatives and 25 senators sent letters to the USTR urging action to be taken. Of course, there's no indication as to how long discovery will take and finding a ruling made. But of course, I will try to keep everyone informed of any new developments. Moving on to Class 3 and 4 milk futures. Class 3 milk futures for the next 12 months fell month over month for the first time since February. At May 24th closing, the current 12-month average was down 36 cents from this time last month to $18.38 a hundredweight. May Class 3 was $18.95 on the 24th, and drops to a low in May, and then drops to a low of $17.55 next month, peak around $19 this fall before dropping back into the upper 17s going into the spring of next year. Class 4 climbed steadily from a low of $16.33 a hundredweight this month to a high of $18.04 in November, and then levels out in the 1790s through next April. The Class 4 12-month average continued its 3-month month-over-month growth at $17.49 and is 41 cents higher than the end of last month. Exports surprised a lot of folks this month. March exports at 215,557 metric tons set a monthly record, all-time record. Dairy products, this is up 24% from last year, and at $688 million, the value of March exports is the highest it has been since 2014. and is 16% higher than last March. March exports were equal to 18.6% of total March production and is the second highest percentage on record. The U.S. exported about 1.2 days worth of total production each week during the month of March. Much of the increased exports were attributed to a rebound in sales to Mexico, pretty much reaching pre-pandemic amounts as the Mexican economy recovers from its bout with the pandemic. Exports also grew in China, Southeast Asia, and South Korea across the board, product board. However, current data this month shows that Chinese purchasing is perhaps slowing, so maybe we'll be down in April once those numbers are released. One caveat to this data is that some of the months-long shipping issues that we've been having were relieved somewhat in March, and a backlog of dairy exports were finally able to depart the U.S. So March exports were likely boosted because of this, but overall still counting February and January exports, things are still moving forward, and exports are doing really well and helping clear the market of surplus dairy products. Moving on to risk management and dairy margin coverage. The March margin was announced at $6.46 a hundredweight. This triggers a $3.04 a hundredweight indemnity at the maximum 950 DMC coverage. This represents about $2,270 per 1 million pounds of production history. And annually so far, that's counting the January, February, and March indemnities. That's about $6,500 per 1 million pounds of production history up to that 5 million cap. And that roughly equates to a 53 cent per hundredweight net benefit. So that is after premiums were paid off with January's indemnity and the 5.7% sequestration fee that's charged on government payments. The April margin will be announced after 3:00 p.m. This Friday, May 28th, and is expected again with high feed costs and improved milk price, but the milk price hasn't improved enough to overcome the increase in feed cost, and is expected to trigger an indemnity in April as well. Quickly, just some enrollment numbers. Each week, the USDA releases a report on enrollment numbers, and even now even though enrollment ended in December, still numbers are trickling in across the country, so we'll have slight increases. Currently 18,883 dairies, representing about 165 billion pounds of production history, are enrolled in DMC this year, and from Pennsylvania, 1,683 dairies, representing about a little more than 5 billion pounds of production history, are enrolled in DMC for the year. Moving on to dairy revenue protection. 100% Class 3, 95% price protected floors can be set from a low of $16.58 in the second quarter of next year to a high of $18.15. Actually, for the third quarter of this year, or 25 cents up to about 46 cents a hundredweight. Although this seems expensive, these floors may be worth considering, especially if you're not enrolled in DMC or DMC doesn't adequately protect cost of production. The Class 3 floors set with dairy revenue protection are higher than the currently higher than the Class 3 5-year average. 100% Class 4, 95% price protected floors of $15.19 up to $17.01 can be set through dairy revenue protection policies for 21 cents up to 55 cents a hundredweight. Like Class 3, premiums are expensive, but the floors set are above the 5-year average. And also, one thing worth noting is remember that the 95 price protected policies are subsidized by the government by 44%. So actual premiums if you were contracting on the open market or through a co-op, would be nearly double these prices. And just some enrollment information, policy information on dairy revenue protection. 48.3 billion pounds of milk have been covered in the U.S. with nearly 3,000 policies sold. 635 of these policies have been indemnified and paid about $11 million out to the nation's dairy farmers. And in Pennsylvania, 801 million pounds of milk have been covered with 327 policies sold. And 51 of these policies have been indemnified and paid almost 300,000 out to Pennsylvania dairy farmers. And another thing to note on dairy revenue protection for 2021 is so far all policies indemnified have been at the 95% price protection level. So nothing, no 90%, 85 or 80% policies have triggered an indemnity so far for 2021. So just to summarize things, as I mentioned previously, Class 3 prices for the next 12 months are averaging $18.38 a hundredweight. This is down 36 cents from last month's average of $18.74, and is $2.05 higher than the 5-year average of $16.33 a hundredweight. Class 4 is averaging $17.49 a hundredweight, 41 cents higher than last month's $17.08, and is $2.74 above 100 above the 5-year average of $14.70. So comparing both Class 3 and 4 5-year averages to DRP 95% protected prices shows that based on current future prices, the price floors set by DRP again are higher than the respective 5-year averages. This certainly doesn't guarantee a net benefit if you were to buy a policy, but does show that current protected prices merit consideration based on premium price compared to the difference between current price floors and the 5-year average. Looking at reviewing DMC a little bit and feed costs going forward, the rest of the year, March's DMC margin was $6.46 a hundredweight, triggering $3.04 indemnity at $9.50. The average DMC feed cost equals $11.53 for the year, and is $2.80 higher on average than the actual 2020 dairy margin coverage feed cost of $8.67. So quite a bit. Feed price, of course, as you know, has increased significantly over since last year. The lowest feed cost for the rest of the year actually occurs in December and is $11.44. This means, based on current milk and feed prices, that the U.S. all milk price would have to surpass $20.94 in order to not trigger an indemnity. So if current market conditions became reality, DMC will pay every month this year. Of course, a lot can happen between now and the end of the year. So these numbers are for informational purposes only and are by no means guaranteed. And with that, for the next Protecting Your Profits will be June 23rd at noon. For June's webinar, I'm working on having a guest speaker to talk about maximizing milk production while managing through the high feed prices that we're currently experiencing. I haven't gotten anyone confirmed yet, so just keep an eye out for an email from me. Once that is confirmed, I'll get that information out and the link out. I think it's important that we talk about this subject since, like I said, feed prices are so much higher, nearly $3 higher this year than they were all of last year. So with that, thank you. And if anyone has any questions, fire away. All right, well, thank you for joining me today, and I look forward to talking with you again next month, and I hope you have a great rest of your week. Take care.